This is 1340 WJOL. We are Will County's News Talk Sports. It's time to bring you Money Talk, brought to you by NuMark Credit Union. Did you know that credit unions help change lives every day? There are 260 million members in 117 countries that celebrate credit unions. NuMark is celebrating with their Member Appreciation event October 11th through the 26th. There will be door prizes and special gifts for members and an auto special that you will not want to miss. Let NuMark Credit Union help you do more with your money. Be a part of banking that works for you. Learn more and apply by calling them at 815-729-3211 or visiting their website at newmarkcu.org. That's newmarkcu.org. Well, Money Talk is a program designed to help you manage your money and learn about different ways to put more money in your wallet. And one of those things is getting control and power over your debt. And to that end, we welcome into our WJOL studios Linda Krakora. She's the training manager for NuMark Credit Union. Boy, is this a popular topic that many people don't even want to listen to because they're like, oh my gosh, I know I have debt. I'm sorry. But it's okay.
It is okay, and it does happen, and not all debt is bad. So debt is something that happens with everybody. It's money you borrow.
Yep.
It's really simple. There's an agreement. There's a contract that says we'll pay it back. When you're spending it, it's easy. When you're paying it back, it's harder. But not all debt is bad. You have to remember some good debt does happen. There's investments. A small business loan can appreciate your value, and some things like a house or a car, you're not going to have all the upfront money, so that's not a bad move to have some debt.
So we're going to get into debt, what it is and how to dig out of it, pros and cons, and FICO scores and all those other things as well. We do want to remind you, at the end of the program, we're going to give away a $25 Visa gift card, compliments of NuMark Credit Union. So what we're going to do is talk to Linda, and she's going to give us a bunch of really good information. I'm going to pick one thing out that she says and ask you a question at the end of the program. If you are the first caller at 815-254-7300 and you know the answer to the question that I ask, you will win that $25 Visa gift card, compliments of NuMark Credit Union, that can be picked up at their Crest Hill branch. All right. So before we get into debt, tell everybody a little bit about yourself. You've been with NuMark for a while now, and your role is training manager. So tell us about your role at NuMark Credit Union.
Well, I am responsible for internal training, so new hires, orientation, that kind of thing, and ongoing training for our staff.
Okay.
And that blends a combination of sales skills and brand information and how we can best help our members, because as a credit union, we have members, and our goal is to make their financial lives the best they can be.
Okay. So you train who then? You train your
I train
members,
our staff.
your staff?
I also train members.
Okay.
We do a lot of seminars so that our members are well educated. And that's a credit union philosophy, is financial education for our communities.
Yeah, we just had Harry Stewart in a couple of weeks ago, and he was talking about a training seminar when it came to first-time home buying and things like that. You guys do those all the time.
We do.
Yeah.
The mortgage side does it. Our financial person does it. I do them. There's a lot of people who step in, and we try to bring information to the community through the radio station here that, helps them out with little tips and tricks whenever we can.
Right.
Even like our mortgage seminars or our Medicare seminar, which is always fully packed.
That was a big one.
Yes.
Did you just have it?
Yeah.
I thought so.
There's another one coming, I believe. But yes, there's so much information out there that everybody assumes and we don't.
No. And it's okay to ask, right?
That's right. Everybody picks on the millennials, but I appreciate the fact that they are so willing to do research. They will look it up online. They will hunt down the answers. And if they can't find it themselves, they are the first ones to find an expert, find someone who does know, and ask the questions.
That's right. You got it. All right. So let's get into today's topic, if you will. Get control and power over your debt. What is the definition of debt?
Again, it's money that you borrow with an understanding, an agreement, or a contract that you will repay the funds. You are responsible for your repayment, and that helps you establish a good credit score.
Okay. All right. So just jump right in, man. Serious debt. And again, we're not talking necessarily about your mortgage, maybe even a car loan within reason. Maybe you don't need to buy that brand new $90,000 whatever.
No.
Okay. But, I mean, if you have normal run-of-the-mill debt, I guess what would that be considered? A mortgage and maybe one car payment or two car payments? What would you consider normal debt?
Well, everybody has some commitment towards rent or mortgage,
Right.
an automobile, and with two working parents in a household, you have two automobiles.
Yeah.
And those include insurance and all those things. But then we get into credit cards. We are a credit card society, and we've learned to go out and hit those expenses and things we want, put them on plastic, and then figure it out later. And it's the figuring it out later that can put you into serious debt.
Yep, absolutely. So let's go with maybe the first step. Or no, let's go back to so what's required to dig your way out of debt? Obviously, a pot of cash would be fantastic.
Winning the lottery would be awesome.
But then we'd screw that up too.
Yeah, typically. It does take willpower and perseverance and a commitment to change. You have to change your lifestyle a bit, a serious plan, and breaking old habits. You have to be determined. There comes that point in time where you go, I have to fix this because it's getting worse, not better. And you have to stop and make a plan and follow it.
It's a good idea. You do have to look in the mirror and say, this needs to change. People do it all the times with their eating habits, with their fitness level, with maybe I'm going to be a better husband, a better wife, a better father. We see those come to Jesus moments, but unfortunately, a lot of times the debt thing takes a back seat.
Absolutely. And you kind of live, Americans are known for living paycheck to paycheck, quite honestly. And you live with whatever's coming at you right now. We don't really save and plan for that big future. And it comes. I'm, close to retirement, and it's like, uh-oh, I knew I forgot something. And those are the things that happen to us, though.
Yeah, no doubt. All right, so by definition, Linda Krakora, what are the different types of debt are there? I know you mentioned some of them earlier, but kind of go through them.
Sure. We kind of break it down into three categories: secured and unsecured, fixed interest and variable interest rates, and fixed payments and variable payments. So secured credit is something that uses collateral, like a home or a car. Unsecured is your credit cards or personal loans. Fixed interest rate is one that stays the same interest rate the full timeline of the loan, like a mortgage. You know what it's going to be from day one. Variable interest can change based on the economy and things that are going on. And we see a lot of that in credit cards where the interest rates can change. Installment credit is a loan that you say you will pay on by a set time. So that would be your mortgage or your car payments. You take out a car loan for, used to be tops was 3 years. Now it's 4, 5, 6, 7 years.
Sure.
But during that time period, you have to pay off the balance of the loan. And revolving credit would be a credit card. So you use it, you pay it, it's back there again, you can use it again. So that's the three different types that we look at.
Boy, we have made credit card companies rich, haven't we?
Oh, my gravy. Yes, we have.
Oh, boy. Good idea, whoever came up with those. First step, though, what is that? The first step is saying, you know what, I don't have maybe you want to say, I have a problem, I need to fix this. It's probably admitting we need to make a change, right?
Yeah, it is. It's that paycheck time where you go, oh, my God, we're not making it and paying everybody and going to make it to the next paycheck. And suddenly it's that realization. So the first step to getting yourself out of debt or managing your debt, because not everybody's overloaded in there, but it's still cutting into what your lifestyle is. So you need to take inventory of your debt and make a list. I cannot emphasize this enough. One time a year at least, and it helps to do it at tax time. Go ahead and make a list of everybody you owe, what the balance is due, how much you pay monthly, and what interest rate you're paying. It's important to know and to see what you actually owe. And sometimes you make that list and you go, oops, I didn't realize we were that deep, because it's so easy to use that credit card. So go ahead and make that list, take inventory. You need to know where you are at compared to your income. How much do I owe compared to how much do I earn?
Sure.
Because you need to know where you are now to know where you have to go.
Yeah, I don't know. Is there a debt to income ratio that's out there for individuals?
There is. Your debt to income ratio is shouldn't be more than 36%.
Okay.
And debt to income ratio, what that means, it's the amount of your reoccurring monthly debt. We're not talking your groceries and gas for the car. We're talking the mortgage, the electric,
Sure.
everything that really happens monthly, your loans and your car payments. And actually, it's not even your electric. It really is anything that would show up on a credit report.
Okay.
So you want to take those that you owe to others and take a look at that. And to get it, I'm trying to remember here.
It's okay.
You take your gross monthly income and your reoccurring debt. Your monthly reoccurring debt divided by your gross monthly income will tell you what that ratio is.
Okay.
Now, again, don't include groceries or entertainment or stuff like that. Just the actual debt that shows up on a credit report. That's going to tell you where you're at.
Where you're at, sure.
And the reason for that is because there's differences. So for someone like me, if I have $10,000 in credit card debt based on my income, that could be very tough. That's a tough nut there to deal with. On the other hand, somebody like you who makes the big bucks,
Sure.
that may not be as much of an amount out of your paycheck as it is out of mine.
Exactly.
So that's why we look at that ratio to see, because your debt, you could only have $5,000 in debt, and that's awesome. And somebody with a large income having 15,000, it's going to be very different.
Yep, you got it right. That makes perfect sense. We're talking today with Linda Krakora, training manager, NuMark Credit Union, getting control and power over your debt. So we've talked about managing, identifying. Let's talk about the pros and cons, because there are some pros of having debt.
There are. Pros, they allow you to take advantage of a sale. They provide cash for emergencies. It's used for investments like houses and cars. Very few of us anymore can afford to buy a car for cash.
Right.
You really have to have some debt out there. It just happens. And I know there's some theories that say don't have those things until you have the cash for them. But we're not that kind of society necessarily. No. And having a vehicle, a car is really a very basic one. We need it to get to a job, from a job, take kids to school and things like that. So it's kind of a necessary evil. And that kind of credit can be very good. And when you're paying those payments on time and taking care of it, it improves your credit score. The cons of credit, we do know that by simply having credit cards available or credit available, a person's likely to spend 34% more than they would otherwise. If you were buying it in cash, you're going to think a couple of times before you spend it, whereas if you're buying with plastic, you swipe pretty quickly. It can take months or years to pay off. Credit used poorly, can totally damage your credit score. And we found that not just a lender uses your credit score. They're used for employment purposes. They're used for your auto insurance and your home insurance. Did you know an insurance carrier can turn you down because you have a bad credit score?
No.
I didn't know that until recently, and it's like, holy cow, that really stretches out to where you're at.
Well, you really feel for those people who are struggling and have had to use credit that get jacked up by the insurance companies because they can't, well, sorry, you got bad credit. We're going to charge. I mean, it's just not fair. There should be some type of legislation that prevents that.
I agree with you, because my having financial difficulties doesn't mean I'm going to drive poorly. I don't see the correlation there. I do see when a lender's looking at your credit history and they say, ooh, you're not paying off or you're always paying late, you're a higher risk for me to give you money. Insurance, not quite the same thing for me.
Yep. All right. Imagine as far as using too much credit, we look at that debt to credit income, right?
Yes, we're going to look at that ratio and see where we're at. And we're going to try to figure that one out. So that's basically where we use that ratio, is to figure out how that is. When most lenders won't lend to you if you're over 36%, and it depends on the lender and what the loan is for and the balances of what other extenuating circumstances. But you also will find that you're overextended at that point, and you're living paycheck to paycheck and not always making it. When you're having trouble affording groceries because you paid your bills, there's a problem. And I know a lot of people that run into this not by being wily and crazy out there with a credit card, but because maybe they were off work for a while, now they're back. They're trying to pay the bills, but things are so close and so tight that there's not enough money for something and they have to pick. Then you do know that debt is a problem. For those people who just have no control and, merchandisers love them. Let's put great stuff next to the register and things like that. And, oh, yeah, of course we take a credit card. Those kind of things can get you into trouble, and you need to learn some control for that.
No doubt. No doubt. FICO scores. Tell us a little bit about that. It's kind of everything, isn't it, your FICO score?
It is, and everybody's like, what's FICO mean? And it took me a long time for me to figure that one out, too. It's the Fair Isaac Company Score, or FICO. So Fair Isaac is a company that came up with this whole balancing act of what is involved in a credit score, and we live and die by them nowadays. Yeah. They became way more important than I think anybody ever knew. So according to Fair Isaac, they say this is a measure of your financial health. And the average FICO credit score is about 693, according to Experian. Typically, anything higher than around 760 is considered very good credit. If your score is lower than, say, 600, you likely will be charged higher interest rates, but it varies by lender. But when you're in that 600 range, low 600, you're going to struggle a little bit more, and you're going to pay higher interest rates.
Okay.
Your FICO score does give a lot of determination on what kind of interest rates you pay on things.
So 693 is that magic mark.
Yes, that's the average credit score right now.
Okay.
But in a nutshell, what's in there in that FICO score? 35% of that is your payment history. And you have to be sure that you're making them on time because it's the largest number in this little circle of what FICO looks at.
Okay.
So people who say, oh, I made the payment, but I made it late, the late payment's killing you. So pay attention to that. 30% is the amount owed. 10% is based on new credit. 15% on the length of your credit history, and 10% on what kind of credit mix you have. Is there a mortgage and a car and a credit card, or is it all credit card debt?
So paying on time, the most important thing.
Most important thing. I remind people of this all the time. Make the payment on time.
By far and away. Okay. So those are some really good tips. So as kind of an overview, Linda, we tackle debt by all of the above, basically.
Yes, we do that. Get organized, have a plan, follow the plan. Be sure you're discussing this with whoever that other person in the house is. And there is not a thing wrong with telling your kids, listen, we can't afford that this week. We're going to have to put that in the budget. Teach them to budget now while you're going through it so they don't when they're older. They know how to budget and they know how to plan. Contact creditors. If you're having problems making your payments, contact the creditor. You being upfront and taking responsibility has a lot of impact. And you say, listen, I want to make my payments. I can't make all of it, or this date doesn't work for me. And most creditors will work with you and try to work that out and figure it out. They'd rather have something than nothing.
That's true.
So be upfront with them. It shows your responsibility and your commitment. Use online bill pays. Seriously, if you do it all there and you can keep track of it, because you need to see what you're doing and who you paid and when's the last time you paid them. Break your payments up. Do them every 2 weeks if you get paid every 2 weeks instead of once a month. Sometimes it makes it easier to balance your paycheck.
Sure does. All right, let's talk a little bit before we let you go about how NuMark can help with those wanting to tackle their debt.
Well, we were always happy to go through your files with you and help you come up with a plan. We also offer the seminars. We have them coming up on 10:15 in Countryside and 10:22 in Crest Hill. That deals with this topic specifically. But our financial service reps are always there to sit down and help you through it. They'll give you ideas. They'll tell you what's the problem. They'll take a look at your credit report and tell you where your problems lie. They'll show you how we can help you fix that and get you on a better standing.
Okay, simple. NuMarkCreditUnion.org is the website. That's NuMarkCU.org. You can find out more information about this and all the other programs as well. And, of course, NuMark is celebrating National Credit Unions Month, if you will. They have a big NuMark member appreciation event from the 11th through the 26th. Door prizes, special gifts for members, and an auto special that you do not want to miss. Let NuMark Credit Union help you do more with your money. Be a part of banking that works for you. Learn more and apply by calling them at 815-729-3211 or again, the website, newmarkcu.org. Linda, thanks for coming in today. We appreciate it.
Oh, thanks, Scott, for having us.
You bet. All right, here's the question for a $25 gift card. Compliments of NuMark Credit Union. What is the average credit score? The average American has a credit score of what? 815-254-7300 is the phone number. Again, that's 815-254-7300. First correct caller on the Turk Furniture Studio line, you're going to get yourself a $25 Visa gift card from NuMark.